Good day all. Ira Epstein of Linn and Associates with your metals market update, and this is for Tuesday, the 10th of September, 2019. You know, the news that jolted markets today was that John Bolton, the, if you will, bulldog advisor to President Trump, was fired, let go, elected to let himself go. We don't know the right story. Here's what I know. Somebody's head was probably going to fly off their body with the idea when it came out that the U.S., via President Trump, had invited the Taliban to Camp David right in front of the anniversary of September 11th. You talk about bad timing. I've made a lot of bad things. I don't think I could have thought of something that poor in taste. In any case, he is gone, and the markets look at that as friendly, because at the same time that happened, they're releasing, and I don't know who said it, that China's putting on the table buying more U.S. goods. Come on, they've offered to do that. They don't. They lie. Either we're hearing not truths, or they're not saying it, or they are saying it, not going through it. I don't know what's going on. What I do know is that we've had contra moves taking place in the gold market, the silver market. In other words, after the big rally, they're in a correction phase, along with the same thing going in yield. You know, we were near what, the 142 level in the 10-year bond. Just, I think it was last Wednesday. It's not even a week ago. We're up to 1726. If you take a look at the metals, you know that they have fallen rather dramatically at this point in time. It's called crowded trades that become uncrowded when they correct. Did the fundamentals change? Not that I'm aware of. On the energy sector, pretty much sideways. But this is about metals primarily, so let's get there. In the gold market, we've had a $40 correction in round figures from the high closing price, not the high of the move, of $1526.60 to about where you're at as I'm creating this video right now. When we look at the chart action, we can see that the market peaked out here in the 1560 level and is now corrected about $70 an ounce. Certainly it's been a painful correction if we're holding on to the long side. In terms of a momentum drop, you've gone from 1566.20 now down to where you're at right here of $73. Can't get away from that. That's just what the market has done. That's a big move. The market is under the 18-day average of closes. You've got a pattern of a higher high, and when you broke through this low, right back here, this was the key. When you took that out, you broke a pattern in the chart. You put the bias down, and you've been correcting since then. Haven't even come back other than one day to challenge that number. Where's the first theoretical support? Well, one of those areas is 1404. The 100-day moving average, the other's the 200-day at 1358. I'm not saying they can't go there, but that's a theoretical support zone. Resistance 1528.30. No trend, bias down. When I look at the Bollinger Band, you hit it just now. And when I say just now, folks, in the past 10 minutes as I'm doing this recording. So you got down to that number. So what we've done is we've gone from the upper Bollinger Band area, and I'll stick with what I teach. The first time you hit it up here, how much did you really give away in that? Not too much. And then the market broke down on you. Okay, it actually broke down starting here. If I had to give you a number, it would be right here. You had the pattern of higher lows, higher highs, and you hit the upper Bollinger Band. Looking back, which is always a pleasure because you're not calling the market, that was reinforcement. That was an outside day down, went to the 18-day average, and from there, while you got through that high, you kept running at the Bollinger Band and again came down, and today was the throwing in, I think, of the towel. I'm not saying if I know it's a low or not, but it's certainly an important number to me. When we look at momentum, you're oversold. So if I'm a bear, I'm looking at a market that went to the lower Bollinger Band. The odds of staying under it are 5% of the time. I have an oversold market that is nowhere near embedding. I think pros are taking some money off the table there. In the ETF GLD, you've got a higher high, lower low, and like the gold futures, this got crowded. I'm sure options on these got crowded, and the market's washing them out. You're oversold, bias down. Target could be that 139.75 level, the lower Bollinger Band. GDX, the same thing, oversold, bias down. You've stretched out the decline, but I'll stay with what I know. Hit Bollinger Bands and you often get a correction. Doesn't have to be that moment, but that's a zone that I'm looking for. The gold-silver ratio still favors silver, so that part, as a person that looks historically at markets, when silver's stronger than gold, it's got the makeup of a general uptrend as one of the elements to it. That doesn't mean you're going up in silver. You came down in silver and you're fighting a battle at the 18-day average of closes. Gee, how often do you hear me say the line in the sand? And when you hit that, that's where I think the market regroups. If you extend, it could go to the lower Bollinger Band. That's a big if. You're right here after coming from 1975 back down to the 1800 level. You've already fallen how much? Quite a few percentage points, right? So we've got a market that has left itself and dropped about $1.50 or so, $1.75 an ounce. That's big. When I look at copper, I see a stall number. The first challenge of the upper Bollinger Band was here. Remember, we were just talking gold getting to the lower bands. I can't tell you that it's going to bottom there or it's going to stop. What I can tell you are what the percentage plays are. Get to Bollinger Bands. I think pros take money off the table. You got up to that band, market stalled, and now you're starting to correct again. You got lower highs, lower lows, overbought, bias up. I think the market left that upsurge it had, and now it's waiting to see what next. Certainly hearing that China and the U.S. have lost Mr. Bolton, and certainly hearing that China supposedly is offering to buy more U.S. goods. That should have been good for copper. It wasn't. It was down $0.50. In the platinum market, the trend remains bullish. You have higher lows, higher highs. Are we overbought? Yep. Are we correcting it? Yep. So it's dangerous up here. You've got a pattern of lower highs and higher lows. This is a dangerous area. To reinstate the bull trend, you've got to get over 965. That will be a problem as I see it, in the sense that momentum is pointing down and you're asking price to do an awful lot. Palladium looks better than all the other metals. Again, it's got the higher lows, the higher highs. It's not backing off very much here, and it's got an embedded reading. Lose the embedded reading, I'll look for the 18-day average of closes to come into play. Keep it as that, you're still targeting the upper Bollinger Band. Last, the dollar index. This is a battleground area right here at the 18-day average of closes. If you take out 98.48, that tips the market back to the upside. Right now, you're in an uptrend. Higher lows, lower highs, though. That's the problem that I'm seeing in the market, and momentum pointing down. You've got divergence all over this chart. We're going into that period also in the dollar where on Thursday, the European Central Bank is going to give us what their monetary policy is. It's going to impact metals. It'll probably impact the dollar to a degree, and certainly the euro currency. The hawks have come back out where they seem to be taking the vocal leadership, saying they don't want the bank to further cut interest rates, to further negative territory. I don't hear too much arguing about going back to bond buying, maybe 30 billion euro at a swath, but we'll see. It's table set time for Ms. Lagarde and the au revoir for Mr. Draghi, the president of the ECB. So it's going to be an interesting time. We've seen his legacy. He often doesn't get ahead of the curve. He's well behind it. So we'll see what happens there. I put out my gold report. It's already done and it's out. It's only up for 5 days. Yesterday was the first day. So by next week, Monday, it'll be off for period. It just comes off. I believe that when I do my reports, they're timely. They're looking, yes, in this particular gold report, I looked at the, if you will, the seasonals in terms of the 30, 15, and 5 years presented by Moore Research Center. I then looked at the quarterly charts, the monthly charts, the weekly charts, and daily charts. And then I showed you what the price counts had done, because they had predicted a top up here that was going to carry back down if the market started breaking. You generally don't get to a fifth price count. Even 4 is very difficult. We made it to a 4th, which means you got very rich in price, and now you're correcting. We'll see what that all means. You can see what it means in the report. Simply go to our website. From our website, go to the word education. From the word education, click on it. You're going to see Ira's metal report. Click on there. You can view it. Remember, probably come off no later than Monday. I'm Ira Epstein. You have a good day.